Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I am Arjun Patsati. China is dumping US treasuries, and its effect is that US treasury yields have risen to levels not seen since 2007-8, just before the financial crisis. And what does this dumping mean for GSECs? What do investors do in India? Should investors wait for RBI policy, or do they think that interest rates are going to go up because of this? A lot of implications, and I'm here to tell you what's going to happen. And before that, if you're a financial advisor, the best place for you to invest in bonds is INR bonds. We have a SEBI registered online bond platform, and all you need to do is check all the bonds on offer and check the best bonds available at the best price, most transparency in information and prices, and the easiest of settlement processes for your clients. Download, log into INR bonds partners and see your fixed income assets grow. Investors and advisors can also download our app, Quick Invest by INR bonds, for seeing a curated list of bonds for easier decision making. Again, best information, best prices, and the easiest of in-app investment process. All this from INR bonds, online bond platforms, SEBI registered. And definitely, I'm sure all of you know the risk of bonds carry interest rate risk. Prices can move up and down. Liquidity risk, you may not be able to sell or buy the bond at the price one wants to, and credit risk where there is default implications. Back to where China, you're dumping US treasuries and India gsec is. So clearly, there are two aspects to this. One is China is offloading its US treasuries holdings. It has been the biggest buyer of US treasuries, and unless that is absorbed, yields are going to rise. And second is the US Federal Reserve is also still hawkish. Inflation is still high according to them. And they may hike rates by one more 25 basis points before they stop. That's their guidance. So markets are worried. Who's there to absorb this kind of selling by China? Clearly, traders don't want to buy because of worry of inflation. And clearly, other global banks, central banks do not want to hold because they may not be running very large current account surpluses. All put together, it's still very uncertain market for treasuries. Similarly, this will feed into GSECs. GSEC yields have gone up to 7.25% on the 10-year. It had gone down all the way to 7.1%, and now it's again higher. And looks stable to higher, but definitely not a lower trajectory in terms of yields. The RBI will again be very cautious on this whole China aspect, US Treasury, rise in US Treasury yields, and also the fact that of inflation coming back to haunt central banks. So all put together, still hawkish central banks. And government will continue to borrow, but they have been seeing good revenues, economy is doing well. So that is supporting the markets to a very large extent. Having said that, gsec look to be stable to higher in terms of yields and not down. So investors may want to wait. They're looking at increasing the duration of gsec holdings. And they may there is a lot to bite that time as well. Its markets are not going to run away in a hurry. So wait and watch definitely for gsec traders in India and investors. And there are a lot of other options available for them to park the money in. I think calculated calls on timing the market to invest in GSECs. So still a lot of uncertainty as we go by, and we don't see the selling continuing to, not abating. It's going to rise and rise or stay high for months on months. And till US Treasury yields settled at whatever levels, it's still going to be very uncertain markets. Thank you for listening in, and do not forget to subscribe to our YouTube channel if not done so already.
Attention financial advisors. Want to attract new business and customers? Offering a new asset class is the key. With debt mutual funds and MLDs losing their tax advantages, your clients need to diversify fast. Look no further than corporate bonds. the perfect solution for safety and good returns. Partner with INR Bonds for expert guidance and valuable resources to get started. Access a wide range of bonds on our portal and manage your client investments with ease. Visit partners.inrbonds.com today and unlock new business potential.